Hello and welcome to Pro Trader Strategies market commentary for Monday, August the 24th. I hope you guys all had a great weekend. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all comes in to impact the markets with my market analysis. And I do the same thing in these daily market commentaries, but I'm going a little bit further and talking about option strategies that I implement into my portfolio based on some guidelines that I have come up with over my 25 years of trading to help streamline your process in finding the right option strategy for any given assumption. All right, so without further ado, let's get on with the economic data. And there's really not a whole lot to see there. As a matter of fact, we didn't really get any economic data. It's a Monday. We don't usually get that. So the markets are being driven by the geopolitical environment and some of the other things that we're seeing going on in and around this pandemic. And one of the big things is convalescent plasma. That is something I actually have a scar from, is giving out plasma back in my college days. Make a little bit of money for the weekends. Anyway, that is maybe a little ahead of it, but the fact of the matter is now we're testing with plasma. Another thing that is kind of opposite of that is somebody in Hong Kong is a first time we've seen a person officially getting coronavirus for the second time. Now, it is a different strain of it because this thing is kind of mutating a little bit. He didn't show any signs of corona, but going through testing, they found that he has gotten corona again. So that was a bit of a wet blanket on the overall markets for a little bit, but now we're starting to see some moves again in the equities. Something to note, a lot of these high flyers are looking a little frothy with the chart set up. We're going to have to wait to the end of the day to see how they work and if they work out, and then see how the market either confirms or negates these pattern setups. But looking a little bit frothy, we're seeing these stocks that have said they were going to do splits really blast off the to the upside, and really it's a bit of a conundrum because it makes it almost feel like it's getting way ahead of itself when we start seeing that happen. Just because you announce a split, that people believe that more and more people are going to migrate to those names, and that has almost a flip effect for me, where it's just really blowing the top off the market here in these underlyings, and that makes it even more pressing for a correction. So we might see a major correction in some of these bigger names. Yet to be seen, obviously, but it's just feeling like they are getting a little overdone to the upside. All right, crude oil right there, $42.50. Seems like it really wants to hang out there for the foreseeable future. It's getting stuck in a rut, and we're really building up some time and volume here, but I don't think that we're going to see it blast off to the 50s. We covered this gap back here a while ago, and the market's just really settling down. Now, I usually talk about this as it's winding up with the stocks, like a rubber band getting twisted tighter and tighter. But it's not the same here with crude oil, because it is really a supply and demand type of structure, a little bit better than what we see with some of the equities there. All right, gold coming off a little bit today, not making any attempt to get back up there to the 2,000 mark. It seems like the market has been satisfied, I guess, with that 2,000 mark, and just doesn't seem like it really wants to push up there. Part of that has to do with the fact that they can't come up with a package for the next round of stimulus, so nobody really knows if they're going to be printing that much more money or how much money they will be printing. So market's really kind of suffering there. One of the big breakdowns on that is that the Democrats want to bail out some of these cities and municipalities, and the Republicans don't really want that. They're saying that you guys were mismanaged already. They don't. The cities and states saying that they can't pony up the extra money then for the unemployment insurance. So a lot of things going back and forth that they can't come to an agreement on as of yet. So that's a little bit of that weakness that we're seeing there in gold futures. Bonds right there at the 180 mark. Yes, it is a 179 handle, but it is right at the point of control. We finally got that point of control to move higher for the volume. We've been talking about that for quite some time, that we could see the volume node really build up there, but we hadn't actually seen the shift in this paradigm. Now we're getting that shift, and moving back to that 180 handle is where the sweet spot is. Yes, we are slightly below that today, but for the foreseeable future, that's probably where we're going to continue to stand. All right, VIX slightly higher on the day, despite that we're lower than where we were at the open, but we're seeing a lower VIX from the open because we're seeing the equities really push again towards the highs of the day. Now, some of these highs were printed overnight, but the Dow Jones really showing some strength here, up 275 points. The NASDAQ up 68.75. Again, looking back at this trend channel I've had forever ago, and it's I've had it extended for a long time, but you'll see that I can probably pull this up on a monthly chart. Let's see if I can find the monthly really quick. I guess I don't have it, but it's probably back to here, so you can see back to 2000 and what is that, 2018, where I built that trend channel for a little while, and then we kind of bounced up against it going into 2019, and a couple of sell-offs, but finally reapproaching that trend channel there. And you can see that this trend channel is probably a better 45 degrees than this. Is why we call this more of a parabolic move to the upside. You can see how steep that is. And just again, reiterating that these techs that I've been talking about, most of them are the ones that are looking to split, like Apple, are really pushing this market higher. And there's like 6 names that have really driven this market. And again, that's why I'm saying it feels a little bit frothy as we start really rallying to that upside there. All right, the E-mini S&Ps at 34.24 is an overnight print, although the 34 handle is a all-time high even during a day session. As you can see back here, we never got up to that 3,400 handle. So now well into that as well, and trying to print that in the day session. We'll see here on the E-mini S&Ps, you can see that that 34.24 was printed overnight just before the market opened, and pretty much a day session to flush out the overall longs. Now, this was the convalescent plasma story that we got over the weekend, and markets really started pushing higher on that open. And then we got a couple of things like the Hong Kong second coronavirus, or person with the second case of coronavirus, kind of threw that wet blanket on the overall markets. And the fact that the day session likes to, a lot of times, especially when we're at these all-time highs, try and flush out some of those weaker hands there. All right, so let's talk about some of the trades that I've done with Uber. You guys remember, I just wanted to talk about Uber because I am now officially short Uber in my portfolio. I remember, if you remember, I sold those August 29 calls in there, and covered half of them when the market started rallying, but this was all based on the fact that they were going to go into a shutdown and walk away, expecting them to walk away from California, but they did get a reprieve from the courts there, and the market has celebrated that for the most part, but I do believe that we're going to start seeing some weakness in there. So I've got a GTC to get out at 29 in Uber. Obviously, still $2 away from that, and you know, I haven't tried to lower cost basis at this point, but I'm going to try and hold on to this for a couple of days and see if we get a bit of a correction. We start seeing a push to the upside. I'm going to pull the ripcord on this. Real itchy trigger finger in Uber there for that type of trade. All right, so Uber. The other one is Pfizer. I'm looking to get out of this one as well, because it's just not going anywhere. It's just stuck in the mud, and today we're actually starting to see the market come off a little bit from the highs. As a matter of fact, it's done nothing but sell off and starting to look like it's gotten a bit of a confirmation here. Now, I've drawn this little flagging pattern. You break above that, and it should want to really press up and test this value area high, which is what I was expecting. but not really wanting to do that. And theta decay on this because I'm long calls in here. I'm long the 38 calls in there. Yeah, those are in the money right now, which you would think that that is a winner. But remember, I paid $1.22 for it, and that theta decay is really starting to erode away at my trade there. So I'm looking to get out of that for a scratch. So I'm trying to get, I bought it for 122. I'm trying to get out for 122. Right now it's trading around 120, 115, between 115 and 120. I was expecting the market to really blow off on the upside, but once I started seeing this weakness, I decided it's time to pull the ripcord on this. I've been in this trade for quite a while, and you can see what would theta decay do to my position. It's just trading sideways, and he's just nibbling away at it. So I'm looking to pull the ripcord on that trade as well. And then GLD is a trade that I got out of here. I got out of my 170 puts for a 50% of max profit. Now you guys remember with this trade in GLD, I've had a couple of opportunities to get out right around this level. The theta decay, the volatility starting to come out has helped me. And in that, I did this September, sold the 170 puts in there for $1.30, and I covered those for 63 cents. All right, so slightly better than 50% of max profit, but it is a win nonetheless. You can see the market has gone against me, but because I set this up with those guidelines that I teach you in these webinars, as a matter of fact, we just did one on the short put spread around GLD on how to set that trade up. Well, with this, I did it a little bit earlier in the week ahead of the short put webinar that we did, and it's worked out quite nicely. You know, that's the beauty in following these guidelines, is you don't always have to be right in order to make money. Kind of like that Pfizer trade, I set it up so that, you know, I increased my probabilities of success. Those were different, totally different scenarios for a bullish assumption. I had a bullish assumption in GLD. Why did I sell puts there? And in Pfizer, I bought calls, right? You don't always have the same strategy for any given assumption, and that's what I try to convey to you guys in these webinars. So make sure you check those out, because we have specific guidelines to set up your trade for your bullish assumption, and that will help you increase your probabilities of success, especially when you are wrong on your directionality. Wrong here, kind of right in the Pfizer, but it's traded sideways. I expected it to really make some moves to the upside, and it just hasn't done that. So, you know, I don't always have to be right in order to make that money, right? All right, so this is a trade that I have added to my portfolio, and it is BILI. It always reminds me of Caddyshack. Oh, Billy. Well, BILI isn't golf related, and the market is starting to come off a little bit in here, but I'm getting that volatility. I got that volatility to spike a little bit today, so I was able to take advantage of some volatility expansion before I put this trade on. Now, I'm going to keep an eye on this because the pattern is starting to show up like it wants to correct a little bit, but I think I have good strike location on this trade, so I'm pretty happy with it. And with BILI, B-I-L-I, I went in and sold these September 40 puts in there for $1.03. So it's a little bit tight, but you can see that there has been some support down here at around that 40 level. I collected another $1. That puts my break even at 39. So a nice trade location for this. If we get a little bit of a rollover, I'm okay with that. I think that this market is going to continue higher. They are into the 5G, so I think 5G is pretty much where people are going to start to look to put their money after this whole stay-at-home trade starts to fizzle out a little bit, or people start taking profit and moving money elsewhere into things like I've talked about with the blue chips, like Deere making all-time highs today above 200. First time it's ever done that. So markets starting to maybe do that reallocation trade where we see some sector rotations going on, and I've been waiting for that to happen for quite some time, and it's given us some insight or a couple of looks at that trade, but I think that we're going to start seeing that catch on a little bit more as we start heading through August and into September. All right, so that's all I've got for you guys, other than we do need to take a moment to go over our disclaimer. As we are an educational company, please know that there are risks to trading, and we are not trying to get you guys to follow on my trades. I'm just using my trades as examples for you guys in how to set up option strategies in and around your given assumption. All right, so that's all I got for you. Go to protraderstrategies.com, sign up for our webinars, as I will teach you those guidelines. Also, you can follow us on Facebook for a lot of great content there. All right, so if you can't take that, take it easy.